Thank you so much. So good evening, everyone. Today's okay, this is another hiccup. Welcome to today's session where we'll be talking about 5 eye-opening secrets to jumpstart your stock market journey. I know that it's like media already, and by now a lot of us, in fact, one of the things that prompted this meeting is because someone already reached out to me and was like, oh, I'm done with my savings goal for the year. And I'm like, okay, it means that I'm already late, because the goal was at the beginning of the year, I posted in the community whereby we're going to be doing more community events. We're going to be doing more savings. We're going to be doing more investing. And our savings are like in 3 parts. We have the Millions Club, we have the annual savings, and then we have the savings towards the new year. So for those people that are like, oh, I'm pretty indecisive about whether to save or not to save, don't worry. By September, when it's time to prep for the new year, we're going to be starting another savings challenge. And I hope that you're going to be joining in. Right? So welcome. And today we're going to be doing something really fast, something really sweet, something really spectacular that I am very sure that you're going to be interested in. And at the end of the session, you should already have, or rather you would have picked up knowledge and tools to help you start your investing journey. And you're supposed to now be more confident, or you'd feel better, or you know that, okay, you're on the right path to your investing. And then you'll be able to know, okay, whether some sort of investments work for you or not, and how you can actually start building that investment portfolio, right? So I just realized I didn't say welcome, Favor, welcome to the YPFG community. So this is going to be an hour short. An hour is a very, very short time. That's just 60 minutes. So I don't have time to be playing around, right? So the only thing I would need you to do for me is that to ensure that you're in a room that is free of distraction. You're probably making use of your headset, or you're making use of your AirPods, and you also have your note and your pen. So the funny thing is, I myself have a note and a pen by my side, because it is absolutely important. Because most of the time when I teach, the beautiful thing about being a tutor or an educator is that you learn as you go. The more you repeat things, sometimes some things just decide that, okay, it is today, the 15th time you're saying it, it wants to stick with you. And I also have my notepad and my pen with me, because I'm also going to be taking notes as I am talking, or rather as I'm teaching. And then take note of your question, because within the session, just by the end of the session, before your free gifts, or rather before the gifts I have for you, I am going to be taking questions. So don't feel like, oh, I'm too fast, I'm too slow. Your screen is in the background. Okay, so please confirm whether I'm in the center. Center. Let me go and fix this. Anybody? Thank you for drawing my attention to that. Please, can you confirm? I'm at the lower left, so it means that lower left. Okay, this is left. Okay, thank you. So it means that you can still see the screen, right? You can still see whatever I'm projecting, right? If someone's mic is unmuted. Please, can someone confirm that you can still see whatever I'm projecting, even by the side? Okay. All right. Thank you for that. While I'm speaking, I'll try to figure that out, but please do well to just listen, and so that you can get as much as possible. And good thing that you called my attention to it already. So I'm working on it as I'm speaking with you. So yeah, thank you so much. So this particular session would be most valuable to you if you're actually a beginner in the stock market. And trust me, you don't actually have to be a beginner to get as much as possible from today's session, because if you're listening, it means that you're going to be getting something new. So I created this particular session in a way that I actually put in a lot of things I never talk about. So just in case you're wondering, okay, so just in case you're wondering that, oh, Is it what you've been talking about on Instagram? Is it what you've been talking about every other day? No. This session actually took me a lot. Like I sat down for the longest, or rather, we knew about the session from last month. And for the longest, this is the longest time I've ever taken to prepare a slide, because I didn't want it to be the same. I didn't want it to have the same information that you can as well just go and pick from Google, or you can as well just go to my Instagram page and pick up. But not to worry, things on my Instagram page are still very much valuable, but this is going to be very different. And yes, it's going to be beneficial to you as a beginner, or that is new to the stock market, or you who already has some sort of knowledge before. And then you want to stay to the end of this session if and only if you want to improve. One thing I like to always say is that no man was born an expert. I wasn't born an expert. You were not born an expert. In fact, anybody that does anything right now probably took some time to learn. In fact, those geniuses right now also take time to like hone their skills and do better over time, right? So you want to improve, you started investing, you don't exactly understand what is going on, then this session, you want to stay to the end. And then you're looking at, okay, I want to start investing, I want to have some sort of financial security, I want that at the end of XYZ period of time, I want to have made X amount of money or whatnot, then this particular session is also going to be for you. And last, okay, another thing is you also need some practical tools. You want to know, okay, where should I be searching? What should I be reading? What should I be doing? Then you are at the right place, right? And most importantly, you are committed to learning. So let's say you're already a guru, you're already an expert, you already know what you are doing. You just want to learn. You just want to get some sort of reminder, right? This particular session is definitely for you. So I know that a couple of us know me, but some of us do not know me. So let me do a quick intro of myself and why you should be listening to me and why you should pay attention till the very end of today's session, right? So I actually started making money in primary school. I started making money as far back as primary 4. That was the very first time I can remember doing business, and I made a lot of profit, right? And personally, I'm someone who has always been naturally inclined to save money, in quote. So I'm a compulsive saver. Anytime I'm thinking about money, I'm thinking about an income, the first thing I'm thinking about is how to put some away. But now, good thing that I now know about investing, and I now consciously do a chunk of this thing to my long-term investments, right? And then how did we exactly get here? I actually experienced some setbacks. I actually lost a lot of my money to wrong investment choices, and that actually opened me up to learning more, because I'm like, okay, fine, I made mistake, fine, I've lost money, but what next? What am I supposed to do next, right? So it made me learn the hard way, learn from my experience, learn while losing money. And I picked myself up and I started learning. And that is why there's even a YPFG, right? And then I started helping my family and friends get better with their finances and their financial situations, because these people kept on coming to me to ask questions because they saw that, okay, I probably was doing something right? So after that, I think a couple of years down the line, 3 years later, I founded Your Personal Finance Girl, which is an educational platform to help you get better with your finances. So wherever you are, either you want to start managing your money better, you want to start earning more, you want to start investing, saving, budgeting, whatever you can think about, right, for your personal finance, Oluchukwu is here for you. Your Personal Finance Girl is here for you. And now, when I talk about, oh, I lost a lot of money, when I started my journey again from scratch, I actually started with just 5,000 naira, because what I lost in my previous investment that was wrong ran into millions. I didn't want to calculate what the current value is now, because I might actually have a headache. So I started investing with as little as 5,000. So you just need to know that you don't necessarily have to have like 1 billion or 1 gazillion amount of money to start your investing journey. You can actually start wherever you are. You can start with what you have, which is like one of the most important things. And then it's been more than 7 years of me investing and counting. And I can boldly tell you that I am a serial investor. I have investments in different forms, shapes, and sizes. I have real estate. I have physical asset, other physical asset, gold. I have land. I have businesses, I have stocks, bonds, ETFs, right? These things did not just fall on my lap. All of these investment options did not fall on my lap. I literally was intentional. I literally grew them. And now the beautiful thing is, when I was making today's slide, the previous time I wrote this, it was 7 figures I wrote because I was trying to be humble. But who did humility help? Please be humble, Sha. But anyways, my investment currently runs into mid 8 figures. If you're thinking 8 figures, someone should tell me what 8 figures is, so that we can be clear on what we're talking about here, right? So I need somebody in the chat. I need you to indulge me. What is 8 figures? Just write zeros, 8 zeros down for me, or what you think 8 figures is in the chat. 10 million and above. Beautiful. Anyone? Oh, someone even helped me with the actual 000. Thank you so much. Yes. And that is how much that somebody who said that she started with 5,000 naira has been able to grow to. So fine, I'm not giving you the exact figures, but now you have like an idea of how far you can go. And I am your living testament of how far you can go with as little as you have. You don't exactly have to have hundreds and millions and thousands of naira to start your investing journey and to build the right way. So currently, I can tell you that I'm building wealth, earning sweet dividends and interest that I cannot wait. I think maybe I'll do a video. I cannot wait to tell you how much I've earned in interest. I'll just do probably one platform, but I cannot wait to tell you how much I've earned in interest from just investing. And then the beautiful thing is, all of this interest is pay my bills. I do not have to like literally lift a finger for some certain things. And that is what investing can do for you. That is what investing promises you. So if you know, as you know that, oh, you really want to do better with your finances, in as much as you're managing your money, you're earning well, you're saving, you also want to be investing. And what is that one place you also want to put your eye inside and be very particular about is investing in stocks, in the stock market. So during the course of our time together today, we're going to be looking at understanding the basics of stock markets. We're going to be looking at how to identify profitable investments. We're also going to be looking at strategies to minimize your risk personally, and then tips to build a diversified portfolio, very, very important, as well as how to use tools effectively, right? All of these things are very important for you to be able to build that investment portfolio, for you to be able to earn that money, or earn more money rather, when it comes to investing in the stock market. That is, see, to me, sometimes I just think about how the stock market is free money, because at the end of the day, once you're consistent, once you're putting money into this particular asset class, you're doing so well for yourself. You're earning dividend, you have capital gains as well, and you can literally, after a couple of years, cross your leg and say you're not doing again, you are done, just because you've been able to build the right foundations for yourself, right? So now let us try to understand the basics of shares and stocks. I would love to ask, I hope that you people are with me, is there a difference between shares and stocks? I want to know. Let me know if there is a difference between shares and stocks. Do you think there's a difference, before I go to the next slide where I talk about it, right? Yes, there is. Okay. I need one more response before moving on. Let's see. I don't think there is. Okay. Anybody else? Okay, I don't think there is. I believe there is, but haven't made research how. Don't think so. Okay, I feel they are the same. Okay, no difference. Okay, so now let's go to, please give me, okay. Okay, so let's go to what stocks and shares are. So when you talk about stocks, actually, you're just talking about how it represents ownership in a company. And then not only that, now the beautiful thing is that it's not only that you're looking at ownership of a particular company, they're also divided into shares. So now this thing is quite tricky. So I love to always start from the definition of, most times when you hear equity, when you hear shares, when you hear stock, it is safe. Actually, it is actually safe for you to assume that they are the same thing, even though there's a slight difference, right? And I'm going to share what the slight difference is. So when you talk about shares is that littlest quantity, that one tiny quantity of a particular company. Let's say 1 share of GTB. Yeah, beautiful example. Let's say 1 share of GTB or 1 share of Apple. But when you're buying it, you're buying a stock, which is like a share of the company, right? So people would typically, generally, intertwine the words. Okay, I want to buy shares, I want to buy stocks, I want to buy equity. There is a thin line intertwining all of them together. But typically, you would always hear people talk about stock. So you're taking ownership of it, you're buying into ownership of a particular company. So you're correct. Or you're getting a particular share of a company. You're buying stocks into that company. Are you with me? I want to be sure that I'm explaining as simple as possible. So remember when, I don't know if you remember when MTN opened. So we bought stocks of the MTN company, but we bought a particular number of shares. You got a particular number of shares of that company, but you were buying stocks of the company. So when you buy shares of the company, you're actually just buying a piece of the company. When you buy stocks of a company, you're buying a piece of the company. So it's the use of, is more like making interchanging the use of words. There's sometimes when you want to use is, you're using are, or the time when you want to use him, you're using he. Do you see that? There are sometimes you can't use the sentence, you can't use he in some parts, but you can use his in some parts. You can use him in some parts when you're making a sentence. But you're at the end of the day, when you make that sentence, it's going to be correct, right? I'm trying to see if I can demystify a bit further so that when you're hearing it outside yourself, you'll be like, I'm a pro now. I know what I'm saying. I know what's going on. I know what they're talking about, right? You're not feeling like, okay, this is a lot of jargon, right? So there are two types of stocks that you would hear of. So one is the preferred, whereby okay, this is not entering. So preferred stock is when you're buying into a particular company, but there are no guaranteed dividends. So I'm going to explain. Yes, Joy, thank you. Yes. So you buy stocks and have shares. So the example is clear. Beautiful. Thank you so much. So I really need your comments so that I know that you people are following me and I'm not talking to myself, but I also need to be looking at the time as well. So when you talk about preferred stocks, you're actually just buying those stocks or those shares, but you do not have voting rights, but you could actually get dividends. However, when you're buying common stocks, you actually get voting rights, but most of the time it does not guarantee that you're going to get dividend, right? So I'm sure that after this session, a lot of us are going to be buying some shares or going to buy some stocks of some companies that we're in love with, or we end up researching by ourselves. And then you can now know whether or not, okay, when I'm buying this particular share, or when I'm buying this particular stock of this company, when it's time for them to do their annual meetings to vote, will I have voting rights? You would know by the time you're done your research. So I love to do activities within my talks. So I want you to please write out in the boxes, or rather in the comment section, all of the things that you can see. It could be 1, it could be 2, it could be 3. I just want you to type it out in the chat. I was looking for it in the chat. I was actually looking for the chat. So price, shares. Okay, I'm waiting. Finance, investment, stock market. Thank you so much. I need one more response so we can move on. Investment, stock market, stock exchange. Beautiful. So it would be nice actually if you take a screenshot of this particular picture, but I think I'm going to show. Okay, but not to worry, there's no problem if I show, because some of these things you come across it over and over. I might need to understand what they mean, and instead of having to like go on Google and start looking for, okay, what's the meaning of this, or what does it mean, you actually have a glossary where you can actually do self-learning for yourself. This is actually a very, very robust glossary of the stock market, bonds, and terms that you would need to get familiar with, right? So next thing is the main three I'm going to be talking about today is dividend, market capitalization, and initial public offering. So when we talk about dividends, right? When we talk about dividends, we're talking about dividend is actually you earning a portion. Let's say you buy into a particular company share and then you are able to earn dividend. That is you getting those common stocks. You're earning a portion of the profits that the company decided to distribute. Mind you, not every company actually gives dividend. Not every company pays their shareholders or stock owners dividend. Every man to his own way of business, but this is actually one way to earn from the stock market, right? So not all of these companies give their shareholders dividend. However, market capitalization, on the other hand, is one jargon that a lot of people, in fact, when I started my investing journey, I really did not understand what market cap was. It was pretty confusing, and I was unsure, like, okay, what exactly does this thing mean? Like, it looks, then, and then when you go on Google, you'll now be seeing an equation kind of thing. And that is my favorite part about teaching about personal finance, because I try as much as possible to please remove the jargons. You'll just be having headache because you want to read something, you want to understand something. You'll now be having to deal with so much jargons, right? So market cap actually means, in short, market capitalization actually means that the total market value of a particular company and its number of shares and then its outstanding shares. So let's say should we use Apple? I was going to resist the temptation of using Apple. Let's say Oluchukwu's company now has a market cap of $1 trillion. How do we come across the market cap of that 1 trillion? We have to know how many shares are available for what's it called? Shareholders to buy, like the number of shares that are available that can be bought, and then the actual value that is, right? The actual value that it is being sold for in the market at a particular point in time. So you need to know, okay, how many of these shares are available? What is the current price? That will now help you to know what is the market cap. And most of the time, your market capitalization actually helps you to know how large a company is and what the valuation of that company is at the end of the day. I hope that's clear. I hope I'm not speaking plenty jargons. But either ways, moving on to the next one is the initial public offering. So this is what happens when a company decides that, okay, I want to go public. I want the whole world to be able to buy into my shares, and I want to be open to everybody. So not every company is currently listed in a stock exchange or whatnot. But however, when they want to get listed in the stock exchange, they have to do an initial public offering at a particular amount of money. So now, next thing is, I actually went online and I brought out this thing for you people, for you to know the largest companies by their market cap. Remember that we said that we are multiplying the price by the number of shares, and that is how we know how big, how large a company is. And as of today, from Google, when I did this search, currently we have Microsoft on number 1, we have Apple on number 2, and we have Nvidia on number 3. Then Google, Amazon, these are like the world's largest company, and they are mostly in the US. There was one that is from Saudi, right? Oh, I didn't put it up correctly. So either ways, we have $3.3 trillion, 3.1, 3.1, 2.2, 1.98. So just in case, by the time you are leaving this session today, you can beat your chest and say, I know the largest companies in the world, and this is leading. And when you want to, you can also always go back and cross check that, okay, has one company gone higher? Has one company gone higher? So if you can see now, I love how most of these trackers, or rather most of these websites help you to see that initially, I think it was yesterday or 2 days ago, Nvidia was actually on number one, literally on number one, but the market is not always going to remain in one position. Things happen, news, revenue, so many things are happening, right? And they change places. So you always want to stay on top of your game by checking from time to time while you're bragging. So the next thing is, I want us to quickly brush through how to identify profitable investment, right? So this part is pretty technical, and I would really love that you listen. And I think I'm going to allow for questions from time to time, right? So I would love that you'd listen, because this includes you doing a lot more research and being able to know what you want to do research on, or what is the next thing you want to check on, or you want to read on, or you want to understand better, right? So let's move straight into that. So when you're thinking about identifying your company's, or a particular company's profitability, or what to invest in, you want to look at the company's financial health. And how exactly do you go about that? You go about that by checking through their balance sheet. This is the part that I know that a lot of us we not like. Oh, we don't want to go through the numbers. If you don't want to do that, you probably would now be looking at ways to, oh, should I go ahead to get a financial advisor to help me just create something that works for me? Or do I go ahead to join a community that they talk about all of these things and I can learn as time goes on instead of stressing myself? Or I would just find a way to learn over time, right? So you want to check their balance sheet. You want to know the assets that the company owns. You want to know the liabilities that these companies have. You also want to understand their equity, their net value. When you minus the assets from the liabilities, what is left? What is happening, right? So you also want to now understand whether you also want to also take note of their income statement. Are they making money? What's their cash flow like? Is money still coming into the business? Give me a minute. Is money still coming into the business? Things like that, right? So you want to take note of all of these things when it comes to your investment and companies that you are investing in. You want to be able to answer all of these questions, right? So by the time you look at these things, there are other sub things that you would end up looking at. Okay, what is their profit? What is their net income? What is their revenue like? What is their expenses? What type of operational costs are they going through? What type of investments do they have? What type of financing activities are they doing? Is it that they are using cash, or they are making use of creditors and investors' money? You all want to take note of all of these things, yeah? And the next thing that would be on your mind is, okay, you want to understand the industry that this particular investment that I'm doing is in. The industry that this particular company that I want to invest my money is in. So there are different ways you can do that. So you want to read reports. So for you to understand probably the tech industry, the energy industry, you want to read reports. You want to check reports from their industry associations. You want to look at the Porter's 5 forces. So you want to understand whether they have competitive value or not. You want to also take out time to do what's it called, SWOT analysis, yes, and understand market trends from economic indicators like GDP growth, the inflation rate. Like, I hope I'm not too fast, right? And then you also want to check for the potential of these companies growing, the potentials of these companies eventually growing in the long run, right? So things like this are important for you to know whether or not you want to invest in a particular company. Fine, I know that I'm giving a lot of terms. I'm going to do well to give you a practical example very soon. So another thing is you want to analyze what the company's competitive advantage is. So when we talk about competitive advantage for companies, we're looking at things like, okay, how easy is it for another company from nowhere to come and take over this particular business? How easy is it for this particular company to remain in business? What is their unique selling point? What's their management team like? What's their business model like? Do I understand what exactly they are doing? Funny thing is, once you are able to do 1, 2, 3, you cannot tell me you're not a guru. There's nothing you can tell me again in this, me like this by myself. I will call you a guru because it takes a while for you to go through all of these things over and over, understand one industry, understand one company, and rinse and repeat the cycle for the rest of the other ones. And then you are very, very good to go. In fact, you'll be able to understand more things, understand the news better, understand whether or not this particular news that they just posted is going to reduce my stock prices, whether or not this particular news that they've let's say the US government or the Nigerian government, if something happens, right, you're able to tell whether or not you are in the right direction. So I'm going to give you like a practical example, but before I go into that, I want to find out if you are following me, because I know I've been saying a lot of things. And I want to know, are you with me? Give me some fire emojis. I want to know if you are with me. I want to be sure that you understand what you are hearing and I'm not moving too fast, right? Oh, I got some fire already. Thank you so much, Joy. Thank you so much. Right, so yes. So now let's move to an actual practical example of you being able to identify a profitable business, a profitable investment, right? So now, what company should we use? What company should we use? What company should we use? I'm thinking. I thought about, okay, let's use Nvidia, right? So when we want to, let's go through, okay, someone says Microsoft. Any other suggestion, or we should go ahead? Okay, so since we're having more suggestions, I think it would be best, let me go with the very first one so that we can move. So let's make use of Microsoft as our case study. So first things first, you want to answer the question, ouch. You want to answer the question, what sector is this particular business in? Right? What sector is Microsoft in? Let's do this together. So, okay, I'm the one answering myself at this point. So we're using Microsoft, right? And Microsoft is one of the, in quote, biggest, largest, most influential technology company, if you think about it, because they've been here for so long, right? So we're now looking at, okay, what sector is it in? It's in tech, right? Okay, when this company starts a while back, I think in the 70s, right? And is it mid-70s or late 70s? Microsoft started in the 70s and they have been able to grow. Let me go back to our market cap. They've been able to grow to over 3 trillion in market capitalization. And they want to answer questions, want to answer a few questions. Let me see if I can go on. Let me go on Google. But either ways, want to answer questions like, what are like their assets? How much assets does this company have? Over 300 billion. How much liabilities they have? Over 180. So it means that this is a positive flow company, right? And then you want to look at, okay, what are their revenues like? What is their annual revenue? This information is actually online for everybody to see. Just go on Google and type, okay, what's the annual revenue of Microsoft? The same way you can go ahead to check what is the annual revenue of Zenith, what's the annual revenue of Google, right? So you can actually just write down these questions as I am doing them, or rather as I'm answering for Microsoft, right? So you now want to do, okay, what is the net income? Well, so Microsoft has had like consistently high net income annually. So it means that, okay, they are doing well. They are doing really well. So what is their profit margins? Did they already post it online? What does their cash flow statement look like? We're still on number one. No. So now we want to understand the industry and then their market trends. So we're now going to be asking questions like, what sector is it in? Technology. And how well have they been doing, right? How well have they been doing in terms of this industry that they are in terms of tech? So you know that they're already doing, they already have like continuous innovation. There's this thing, they already have AI as well. They have their cloud-based servicing computing, and they have solutions that they sell to B2B as well. That's business to business. So, okay, I think I understand what they do here, right? So you want to look at, okay, what does their competitor analysis look like? Who are the people that would be most likely struggling with them? So you're looking at the likes of Amazon, you're looking at the likes of Apple, you're looking at the likes of Google, right? These are the people that are most likely going to be in competition. But however, what is their competitive advantage? So we already established that Microsoft in its own, first of all, already sells solutions to enterprises. So they already have their cloud thing that they do and their softwares, that ecosystem that they have. If before we even, let's say from this part of the world, I could remember vividly that before I even came across Apple, I already knew Microsoft, and they were like the major distributors of tech in the world before they started having like deep down, or rather high-end competition, right? So what is their competitive advantage? So you're looking at, okay, we already know that it is a household name. They've been here for a while. They keep upgrading themselves. Who is their current CEO in terms of their management teams? So you're now looking at, okay, is there a possibility, if I want to go ahead to invest, I'm not looking at, okay, does this company look like a company that is going to be here for another 10 years, another 15 years? Do they have like a very strong growth prospect? How people are following me? Oh. And then you also want to now look through their valuation. Okay. You also want to look at their valuation metrics and like, okay, how exactly what's their P/E ratio? What financial metrics do they have that actually regulates their stock prices? Now, do I even trust the management to lead this company further? Because we currently know that AI is everywhere. Are they moving in the line of AI to ensure that they remain relevant, right? So all of these things are questions that you will ask yourself. But then, how exactly can I do this, or how exactly can I answer some of these questions since I'm a novice, right? So I want to quickly share my screen. I think I've spent a lot of time here, but let me quickly share my screen. I want to show you like me making use of an actual, give me a minute. Let's make use of an actual stock screener so you can see some of the things I'm talking about. Okay. Okay, share screen. Okay. Oh, okay, I finally found. Okay, so now, so let's make use of Yahoo. This is going to take us a while to go practical though, but or you could make use of Google as well. You can see that these are things that I always click on. So either ways, please tell me that you can see my screen. Hope I'm not talking to myself. I didn't type the ticker symbol, so I just typed Microsoft. And let's wait. It's loading. So, people are seeing my portfolio. Thank God. Okay. So now, this is me making use of yeah, so I actually wanted to use a browser. I was going to use Yahoo, but Google came up faster. I want us to use different ones so that you can see that, oh, it's actually not so difficult for me personally to go ahead to make research by myself on a particular investment or a particular stock or company I'm interested in investing in. So while we wait for Yahoo to open up, because I absolutely love Yahoo. I have like a bias for Yahoo. So now let's look at what, let me see. I don't know what you can see, but I hope that it is the right thing you're seeing. But now let's look at Microsoft, right? I'm seeing the price here, 449.78. And I'm like, okay, I want to do research on this company. And first thing I'm doing is I'm zooming out to see, okay, what have they been doing for the past 5 years? You could decide to go maximum and let's hope that it opens up. Okay, 1990 to like currently. What have they been doing? How well have they been doing? What is their current previous day close, what's their average, what's their market cap? You can see most of this information as I'm scrolling. I'm just trying to put my cursor around what I'm talking about per time, and then the expense ratio, their dividend yield, and where they are primarily listed, which is like NASDAQ, right? And then if you go down, you're able to see that, okay, there's different news on these companies. And see, this is what I was saying, it was even 3 days ago. Nvidia became number 1 most valuable company in the world, but now they're back to where they belong.
We can't see
but
your
either
screen.
Okay, please confirm. Can you see now? Because I'm currently sharing.
We can only see Google homepage.
And that is where that's what I'm sharing. Can you see Microsoft on the Google homepage? Let me stop share again. And I'm gonna share again. Zoom. Okay. Can you see my screen now?
Yes, we can.
Yes.
So please confirm what you saw last, because I've said a lot of things and I don't know what you heard last.
Google screen, your home screen, Google home screen.
Okay, so okay, that's fine. Let's just start again. So what I did was I made use of Google Finance to try to show you an example of doing a research on a particular company, which is Microsoft, that I had already said like a number of questions about. And I'm like, if you come on Google or you come to a particular, if you come on a particular stock screener, such as Microsoft or Google Google Finance or Yahoo Screener, you'll be able to do an in-depth research on that particular company. So the first thing was, I think when I got here, it was on a day, and I could see that, oh, this is what the company did in the previous trading day. And currently we're not trading, it's the market is closed, so there's nothing to see. And then you have to zoom out, right? You have to zoom out to know, okay, how well has this company been doing over the years? So you could do 1 year, which is the bare minimum you want to check, and 5 years, which is what I've currently done. So we're looking at 2019 up until 2024 now. And we're seeing that for the past 5 years, they've done 226% that is, they've grown over 228%. And then I'm like, okay, out of curiosity, let me even see what the maximum is. So from the 90s when they IPO'd to currently where we are now, how has this company grown? How well has this company done? Doing a zoom out sort of gives you, oh my God, we're out of time, sort of gives you an overview of what the company is. And then a couple of things that I answered, like you understanding what the market cap is, the average volume, the expense ratio, the dividend yield, and where it's listed is something you also want to look at. And then being able to understand, okay, this is what is happening with this particular company. Then you want to go down and look at, okay, why is Microsoft in the news? What has been happening? This is where I now talk that, oh, I remember talking about NVIDIA becoming the most valuable company in the world, but it was just 3 days ago, right? And then there are other things you now want to look at. So there's always going to be news around the CEO, there's going to be news around their product, their company, what they are doing. And remember, we talked about their financial statements, right? So look at it now. This is already very, very visible and easy for you to understand. You can see that the net income is the one in yellow, the blue is the revenue. So, oh, how well are they doing with their finances? And then you can see like all of these things very easy. Remember, I talked about balance sheet, I talked about cash flow. So these are things that you take your time over time to look at. So another thing, the reason I wanted us to use Yahoo, I don't know if Yahoo is currently showing because I just switched to Yahoo. Let me see, let me check my chat. Confirm that you can see Yahoo on my screen.
We can.
Okay, so the reason why I wanted us to use Yahoo before was because when you make use of Yahoo, Yahoo sort of also helps you to arrange, oh, I've scattered it. Okay, so let me just use, let me go back. Okay. So Yahoo sort of helps you to arrange this thing by the left-hand side of the screen. So that way, you're like, okay, I want to look at the summary of the company. My network is taking a while, but don't worry. Okay, yeah. So Yahoo sort of help you to see like a summary of the company, like the profile, different charts, historical data that you might want to read. So now, in all honesty, this could be a bit overwhelming. That's the right word. It would be a bit overwhelming if you're actually a beginner and you're new to the world of investing and personal finance and trying to understand what to do with your money and how not to lose your money and all of that, right? But over time, believe me, you are definitely, what's wrong? Okay, hold on, give me a minute. You're definitely going to get better. So my screen share is still loading. So I need us to move through. Okay, so I need us to move through tools and resources because we have just about less than 10 minutes to go. So first things first is you want to have, okay. First things first, you want to have your, something is wrong. Okay, please give me a minute. Something is wrong somewhere. Okay, so let's look at you being able to tell, you being able to know what next to invest in, right? Okay, it's correct. So you need to know, okay, what can help me understand these things I want to invest in faster? What can help me understand what I'm going to be investing my hard-earned money in? So you need to know that, okay, there are some tools that are going to help you. And this includes a stock screener. So I already showed you a practical example of making use of a stock screener, which is Google Finance, Yahoo Finance, TradingView. There are so many of them actually that can help you to be able to look at a company's overview from beginning to the end, right? So it will help you to look at the market cap, dividend yield, PE ratio, and many more, right? Then another thing is you also want to be very, very acclimatized with credible sources and news. And what are those credible sources you want to invest your time paying attention to. You want to be very sure that, oh, you have access to some news outlets, you have access to blogs that teach you the right thing. So you want to know that, okay, when I'm looking at this thing, I'm very sure that these people carry, or these people report, they report the best sort of news. So we have Investopedia, we have a lot of news outlets that you might want to like start paying attention to actually. Okay, yeah. I knew that there was something wrong. You might want to actually pay attention to some news outlets so that you can actually now start taking note of, okay, am I checking about, are they releasing new products? Is their management doing well? Is there any report of poor profit and loss? Like all of these things that could potentially reduce or potentially put you at risk when it comes to your finances, right? You also want to know all of these things. And then you also want to actually have support group and community to stay connected, right? Because most of the time you're like, okay, I'm having to do all of these things by myself. Is there somebody I can ask? There's the YPFG community. Is there somebody I can just say, okay, well, I was looking at this drug company, I was looking at this pharmaceutical company, and I'm not exactly exposed to the health industry, or I'm not exposed to the oil and gas or the energy industry. What should I be taking note of? Who am I going to reach out to help me take note of these things, right? So this is actually a picture that I did from Yahoo Finance about how their own interfaces. And if you look at how I'm moving Microsoft, they already helped you to arrange a lot of things. So when you come here, you just look at, okay, this is the summary, what's the news saying, what's the chat, conversations about them, yada, 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 that you want to take note of, right? So now I'm going to moving straight into strategies to minimize risk and return. So I don't know if you can see this picture clearly. It's a bit blurry from my end, but however, you can see that where this place is red is showing you high risks, higher potential return. And when you go to the other end, which is like the left-hand side, you have low risks, low return. So this is one of the things that a lot of us have come to know, or come to understand, or come to get acquainted with over and over the years about investing, about the stock market. However, I'm here to tell you that it is not entirely true. So higher risks most of the time does not equate to higher returns, right? Higher risks most of the time does not equate to higher returns, but your understanding is going to help you navigate all of these things. So because we're not going into higher risks and higher returns, I'm going to just be helping you with strategies to help you minimize risk and also maximize your returns. So one very effective thing that has worked and will continue to work over the years is diversification. Diversification is, you can see, this is coin, this is cash, this is gold, this is another cash, different baskets. Do not put all of your eggs in one basket. Ensure that you have your investments spread out in different sectors, in different asset classes, over and over again. So if you're beginning to start your investing journey, do not put 100% of your life savings, of all of your money into stocks. No, no, no. It is not done anywhere. You have to have a varied, or rather a very beautiful mix of asset classes. So if, let's say, you even want to invest in stocks only, you cannot, your 100% that you're putting in stock, probably is 50% of the money that you have, should not be in a particular sector. It should be spread across different sectors to help you to mitigate against, with at least 3-4 sectors should be in your portfolio. And then another thing that helps to minimize risk is you being able to understand your risk tolerance. A lot of people have high risk, which is why a lot of people can close their eye and go ahead to do what's it called, cryptocurrency, and sleep well at night. But there are some of us that cannot do it. Some people are like medium. They want to taste the waters. They want to not taste the waters. They just want to be everywhere and not everywhere at the same time. And there's some people who are they've already told you from the beginning, I don't want to lose any of my money. I only want to invest in companies that have been proven over and over. I'm not doing any new company. I'm not doing anything I don't understand. Just something that's going to keep me safe, right? And then another thing that we should always take note of is that investing, you have to invest for the long term. You can't be doing 5 years and you're saying you're investing. You're playing. Like 5 years is just the beginning. If you could see the example we use, which is Microsoft, you can see how long it took for it to grow that far. Now let's even look at, I think this is, let me see what company I did here. This should be Nvidia. Yeah, this is Nvidia. This is like a 5-year projection. You can see how low it was throughout 2020 to 2022. And then 2023, it has gone over the roof. Just imagine you said you invested for only 1 year. This stock is not doing well. It's going up, it's going down, it's going up, it's going down. You most likely, if you left in mid-2022, you left at the sweet spot, like the very, very sweet spot, because it went down. But now it has gone up. And then this is from today. You can see that there's a point here where it has also dipped again. So investing is not a 1 day's journey. It is not a 1 year journey. It's not even a 5-year journey. It's something that you want to take your time to do, right? And then another thing you want to also take note of is dollar cost averaging. I don't know if you can see this very, very well, but you can see that whether the price is high or it is low, you buy. This is you being able to even out and get a very favorable average for yourself. It doesn't matter if the price has gone over the roof or it has sunk deep down, you keep on buying. This is one way to minimize your risks and, most importantly, increase your returns at the end of the day. So now let's talk about tips for building a diversified portfolio, right? So who is with me? Let me go and look for my chart. I can't find my chart. Okay, beautiful. Okay. All right, so moving on. Let's talk about asset classes in the different risks and return spectrum. You can see that to a large extent, if you remember this picture, let me go back again to our risks and return, how at the end, at the down here, we have like the lowest risk, and then all the way here, we have the highest risk. That is the same thing that this picture actually portrays. It shows us how different asset classes falls under different risk spectrums, under different risk and return. So let's say you decide that, oh, you want to keep your cash. Fine, it's safe for you to keep your cash, but you're not going to be making as much profit as you actually want to make. Let me just tell you the honest truth. If it's cash that you want to hold, you're definitely not going to be making as much profit as you want to make, because at the end of the day, something is called inflation. It is going to come and it's going to erode the value of your cash. And instead of you to have like a lot of money in another few years, you're having that same amount of money, but it really cannot do as much as it should. Then we're now looking at, okay, bonds where you're what's it called, you're giving out loans to institutions. Either you're giving out loans to the banks, the government, companies. This would actually give you a fixed return, right? But there's still more you could do to earn a lot more, right? There's still a lot more you can earn. So we're now looking at, oh, let's go ahead to do real estate. Oh my goodness, I want to invest in real estate, right? But this gives you ownership of a physical asset. But then there's the part where you have you now get to experience higher risks, in the sense that your success. Oh, I'm so sorry, my tongue just tweeted. You're susceptible to fraud. Your funds is not as liquid as you want it to be. You're also tying down a lot of your profit, or rather a lot of your money, to be able to do this sort of investment. Fine, it's a beautiful type of investment. If you come across my fiscal asset classes or the course on seller, you're going to see the benefit, the pros and cons of real estate investing. But it gives you higher returns, but then your risk has gone a notch higher. And then another thing is commodities. Ooh, commodities. I love commodities. I particularly even have commodities. It's high risk and no, let's not completely call it high risk. Let's try and sugarcoat it a bit. It comes with its own fair share of risks, but then it comes with its own fair share of juicy returns. Juicy returns, right? So you also want to look at those things. And then there's equity, owning a business, buying into businesses, businesses that you might actually be interested in, right? You also want to take note of that yes, if that business eventually succeeds, if it eventually becomes what it is meant to be, you're going to be making cool cash, you're going to be making sweet money, right? But then how many businesses survive more than 5 years? How many businesses actually survive more than 5 years? So fine, you're an investor, you know the things that you're supposed to be putting your money in, things you're not supposed to be putting your money in, and all of those things, right? But it's very important for you to take note of these things, right? It's very important for you. Then last but not the least, I couldn't help but include cryptocurrency, right? So cryptocurrency is our most known high risk sort of investment. Yeah. Everybody knows that crypto comes with high risks and high returns, and everybody eventually wants to, or rather for those that are high risk people, want to go ahead and invest in cryptocurrency for themselves. But now let's quickly move to how you now that you are here, you that you are listening to me, how you can actually build your own portfolio, right? How you can build your own portfolio. First things first that you should be looking at is diversification. You have to have a diversified portfolio, whether you like it or not. You have to have a diversified portfolio, and this means that you have to spread your assets across different industry, across different sector, across different asset classes to reduce your risk. Remember, I just said the different asset classes and their different risk spectrums that you want to take note of, right? Then you also need to do this asset allocation. So now I know that I'm supposed to have a diversified portfolio, but what am I supposed to diversify? Like what percentile am I supposed to diversify in XYZ? I need to know. So depending on your risk appetite, right, you need to know whether or not you are to put 50% of your portfolio in bonds, in stocks, in ETFs, in crypto. You need to make use of your own risk appetite to build an asset allocation. And if you need help with that, you can always reach out and we can work something out. And then remember that a diversified portfolio includes stocks, it includes bonds, it includes things that are in different sectors to ensure that you are making the best of the best decisions for yourself at every given point in time. So now, another thing you want to also, okay, this is it. Another thing you also need to take note of is how to make use of these useful resources. Remember that we already talked about tools whereby you're using stock screeners to help you filter different stocks based on different criteria that you most likely would have set up by yourself out of curiosity or out of genuine knowledge of, okay, I understand it is one of the largest health care provider. I understand it is one of the best AI stocks. Next thing is, does it give me dividend? Does it not give me dividend? Like a lot of questions you want to ask yourself. And then there are news websites as well. There's The Balance, there's Monthly Full, there is Yahoo, there's Google, there's your regular Google search as well, Google Finance, Google Search. There's so many of these things, or let's say Arise News. Yes, they do stocks from time to time. I think they have like a sector, or rather a segment that allows you to learn more about what's happening in the stock market, Nigerian Stock Exchange as well. And then portfolio trackers. Yahoo Finance also has a portfolio tracker. So you could either get yourself an Excel sheet that is a portfolio tracker, or you're making use of a fintech that allows you to see what is in your portfolio and can tell, okay, I'm doing this right or I'm doing this wrong. Or you want to go ahead to now incorporate all of whatever you have from your different investments to a particular stock screener that allows you to have a portfolio tracker itself, right? So I know that we've spent more than our time. We're 3 minutes behind schedule, but I'd love to also take questions before we go into the gift we have for today. I have a special gift for everybody that is here, and I'd love to take a few questions from you before we go ahead to that, right? So shoot. I would love to take like a few questions. So let me know if you have questions. You could raise your hands up, or you could use a chat to ask your questions. Okay, so we have one hand raised and one question in the chat. Okay, so to allow people to be able to type their question, I would have like Uri, please can you go ahead to unmute your mic to ask your question while other people who may have questions may still be typing.
All right. Thank you very much for the insightful session. I'm very happy that I joined and I have been able to learn a whole lot. It's very extensive. So my question is, other than commodities, because when you were speaking, I noticed you emphasized on commodities. So other than commodities, what other ones would you recommend for a beginner? Do you recommend that a beginner starts with commodities, or we should just stick to cash flow, then move up from there?
Okay, thank you so much for that question. I didn't know that I dragged commodities. I just said I liked it. Oh yeah, I like everything. But actually, if you're a beginner, you could actually start with basic stocks. The reason why I like to say that you can start with basic stock is because half the time, if you do not take action, actually, if you do not take action, you may not be able to tell whether or not this is for you. And then stock has a very low barrier to entry. Like I said, I started with 5K. If you want to start investing in the Nigerian stock market, you can start with as little as 1,000. In fact, by the time you download what's it called? Bamboo just recently introduced the Naira Nigerian Stock Exchange. Let's say you're using Trove or you're using AfriEvents, you can literally start with as little as 1,000 to buy that your favorite stock that you have done your research on, or that you're interested in, or that you just want to test the water with. So when I was making the list of different assets and arranging them according to their risk profile, minus cash flow, you could do your stocks, your regular stocks. If you have more money, you can let me take us back there. Okay, so if you have more money, you can move to getting some bonds from your bank or from whatever brokerage is opening them up. You could do real estate. Real estate has a low barrier to entry, except you want to get like actual physical pieces of properties. Then you might want to be increasing your what's the word? Your money that you put. Sorry, I couldn't find the right English, right? So, yeah, commodities are good. Real estate is good. Bonds is good. Stocks is good. ETF is good. Mutual funds are beautiful as well. So, I think I saw a question. So let me answer that person's question in between too. So, someone says, or rather, Ojama says, please, what are ETFs? You mentioned them earlier. So ETF are exchange traded fund, meaning that so there's a particular company or fund manager that decide that, oh, we want to build up our ETF, or brokerage, we want to make an ETF just like Vanguard. Vanguard is a brokerage and they have a lot of ETFs. So they track a particular type of asset class. So they could decide that, oh, we want to track 20 ETFs or 50 ETFs that are specifically, or rather stocks, I'm sorry, we want to track 20 stocks that are specifically in the health sector. So by the time you're buying that ETFs, you're buying one ETF, but you're buying into 20, 40 shares of a particular company. So that is what ETFs allows. And ETF is one way to reduce your risks. ETF, index fund, mutual funds are a way for you to start investing, but at a very, very minimal risk level. So this is a different angle, but if we're going to have another class, which would most likely be in the investment club, then we can now break down all of these different assets and which of them you should be going for, because that way you're able to to have like in-depth understanding of whether or not ETF works for you, whether or not what's it called, mutual fund, or a particular mutual fund works for you, or whether or not you just want to do singular stocks, only stocks alone. So yeah, that answers your question. So what platform do you suggest beginners start trading stocks? So do you understand the word trading? Because trading has a specific meaning in this particular context. Trading is that you sit down on your computer in the morning and you're like, okay, what company do I want to do my analysis on that is going to make me some money? I'm going to pump in probably 1 million, and at the end of the day, I want to do 5%, I want to do 10%. That is trading. But investing is that you're leaving it for the long term. So if you want to do trading, you could trade on the various investment platforms that are available. There's the fintechs, what's their name? There's Trove, there's Bamboo, there's Chaka, there's which other person? There are lots of them, right, currently that allows you to trade. You can get any of them from the ones I've mentioned and go ahead to start your trading journey. But if you're thinking investing and you use the word trading, there are two different things, please. So you said you started with 5K. What can I start with 10K, medium risk, not a fan of savings alone? I believe in investing. So now it will be very beautiful for me to answer, okay, please carry your 10K and go and buy one ETF or two ETFs or one stock or Apple or Amazon. But then that would be reckless because I need to understand what your risk appetite is, what your goal is, and things like that. So, but I've answered your question either ways. I hope you picked it. Thanks for this section. For someone who is totally new to stock, what is the best way to begin? The best way to begin, Edward, is by going ahead to go and download an investment platform right now. In the process of you setting up the platform, you taking an online quiz on how to understand your risk appetite and searching for the sort of stocks that are under your risk appetite, and please go ahead to get them. You could decide to buy individual stock. That is, if you're thinking, oh, what individual stock do I buy? What phone are you using? Buy their stock. What internet provider are you using? Buy their stock. What fan are you using? What car are you using? Buy their stock. And as time goes on, you'll be able to understand better by the time you take out time to do the research that I have taught, and then you can start. And should I say again, you can start with 5 to 10K. It's not that deep. $10, it's not that deep. You don't need a lot of money. You just need to start. And then when you start, you need to be consistent, right? So can you elaborate more on the topic of dividend payments and the likes? Okay, so let me quickly talk about dividend. So dividend is when you get money, free money. I love to call it free money. So you decide to invest in a particular ETF or a stock or an index fund, or you buy a share. And then the company is so nice and they're like, okay, so all our shareholders, all our investors, we're going to be giving you X amount or X percentage. If you see, was it Microsoft, their yield is 0 point something. There are some companies that do as high as 10, 12, 13% in terms of dividend payout. And then how do they pay the dividend? Some of them pay monthly, some of them quarterly, but annually, then annually. So imagine if at the end of the year, you set yourself up that I'm going to invest a particular amount of money that could earn me $100 in dividend every quarter or every year. That is how you're going to be earning. But how do you get that amount, or how do you get to knowing that, okay, you want to be earning $100 in dividend? You need to calculate how much investment you have to put in to be able to get X amount of dividend. But either ways, I would always say that dividend is free money. So when you're investing, also be on the lookout for whether or not they are paying dividend, because it always makes me happy. I wish I didn't remember. I could have done a screenshot of the dividend I've received just last month and this month, or just even this month already. I opened my app and I was like, I didn't deposit money. I had honestly forgotten that it was dividend season. So yeah, sweet money, free money, start investing to get dividend. Is there advice to start to invest in individual stock as a beginner? And how do we know when we're researching for stocks? So that is why we had this particular session, Moses, because so it depends on your risk appetite. It depends on whether or not you're ready to risk your money. Fine, if you're a beginner, I would always say that, okay, do a mix. Don't just put all of your portfolio in buying only one type of thing. So you're only buying individual stocks, Apple, Microsoft. By the time it starts fluctuating and you have like emotional shock, you sell off everything and you will lose money. However, when you have a mix, so you could do your ETFs, you could do your real estate investment trust, you could do your index funds, right? Apart from individual stocks, right? So how do you know what stock is better? I already answered when I was answering the previous question about how you would know, because once you know your risk appetite, you've done the test, you can now start looking for asset classes, or rather assets in that line that aligns, this dog, that aligns with your risk tolerance, so that as time goes on, you're building your portfolio and then you're getting better and not entirely learning from your experience only. So how can we buy stocks and how do we get a good broker? So I already answered how you can buy stocks. And then, is it advisable to buy Nigerian stock? Of course, it's advisable to buy Nigerian stocks, but does Oluchukwu buy Nigerian stocks? Not really. She just does it for fun. So I hope that answers your question. I love Nigerian Naira, but it's not serving its purpose for me right now. So I hope that answers. Yeah, it's absolutely advisable. People make billions, millions from the Nigerian stock market, right? But it now depends on personal preference. Also elaborate on economic kind of in a briefing for using it on sales side. Okay, so this is not an economy session, but thank you for bringing it in. Economy is just like every other high yield savings account fintech that focuses on helping people earn more by saving and also getting accountability. We are currently using economy for our annual savings challenge. At the beginning, I think I mentioned that we have 3 savings for the year and then investing and every other thing between the community, right? So economy is what we're using for our 1 year saving challenge, the Millions Club, and hopefully we're going to use it for our road to 2025 savings. So that is going to be towards the last quarter of the year. That is when that particular saving is going to be. So they have their licenses, they have their insurance, and yeah, I would post another. I think if you're on that group, I'm going to post another link where you can read a few articles about them, and that would also help you to join us as fast as possible. I would be expecting your message. So please send me a DM on WhatsApp to my personal, my WhatsApp, please. Can you differentiate between stocks and shares again? Okay, so quickly. So at the beginning, I said stocks. Stocks is that you're buying ownership of a company. Why share is the thing that you are buying. That is, you want to buy one share, but you are buying the stocks of that company. So share is the thing that you are buying, but the name is stocks because you are buying stocks of the company. So I've forgotten the example I used earlier, but yeah. But yes, I hope that helps. So stocks and shares are pretty much used interchangeably. Yes, I remember my example now. So it's the way you can say she's a girl, but you cannot say her is a girl. But she and her describes the female, right? It's the same way we use stocks and shares interchangeably because they both signify the same thing. They both signify you getting ownership into a company, but how it is used is what differs. So some people will say, oh, I bought X amount of shares. And then somebody would rather say, I bought stocks of this company. But we are still talking about ownership of a particular company. Yeah. Thank you. Oh, sorry. Oh, thank you so much. What's the best app you'd recommend for a beginner in the investment market? So, best app. There's no I will not say there's a best app. Oh, I wish you could see my face. Let me be explaining myself to you. So the reason why I wouldn't say there's a best app is because I currently don't even use only one particular app for investing. I go to X for this, I go to Y for this, and I go to Z for this. And everybody serves their purpose at different points in time, right? So let's say, okay, no, I have Bamboo, I have Trove. Did I have Chaka? Let me check my phone. So I'm giving you, okay, beautiful. So I have Cowrywise. Now, I use Carrywise for my mutual funds investment. All of my Euro bonds are on Carrywise. They are not in any other app, right? But I use Trove for every other type of investment I want to do. I also even have a free invest that I'm not done setting up because I was trying to make a video for you people and I was like, oh, let me wait when I'm settled, I'll be able to set up the video and do it all at once. I use Bamboo too. All of these apps serve me for different reasons and I use them for different purposes and I'm happy. I'm happy with all of them. So so me now telling you that, oh, this is the best app, no, that would be wrong. So I think what I'm going to do, just 28th of you, Shebi. So there's actually a PDF that I put in different applications, their pros and their cons. I'll look for the file. I don't know if Esther will remember to remind me, but I'll look for the file and I'll share with everybody who attended this session. So you can see that, oh, I did a bit of research and I listed, I think 5 or 8 apps or 10 apps where I did a pro and con of everything that they have. And most of them I use, right? So I hope that answers your question. So, oh my goodness, we're so behind schedule. So, can you invest with all the apps you mentioned if you are abroad? Yes. So actually, I've looked at Trove. Yes, you can fund with your USD card. You can fund Rise with your USD card. You can, I don't know if you can fund Carrywise. I haven't checked in recent time. But depending on your location, so now the question is, where are you? Your location will determine the type of apps you could use. And if I have friends in that location, I could just direct you to them and then you can have a conversation with them and that would be way, way easier. That would be like really, really easy for you. So in the UK, yeah, don't worry. I'll please just send me a message today and I would send you people. I'll send you people you should go and meet for UK investing so that I'm not cross bordering whatever. But yeah, I hope that helps you. But yes, you can do Trove, you can do Rise from where you are. So yeah. Thank you so much, Joy. Okay, don't worry. To everyone who attended this session, I'll look for the file and I'll send it at the end of the session. So please give me 5 more minutes of your time because I want to introduce something very dear to my heart, which is the YPFG Investment Club. And the YPFG Investment Club is going to be that dedicated community that you will be able to get educational resources, exclusive workshop and seminars. You're also going to having like networking opportunities. I've always dreamt about it. I've always dreamt about investment clubs because doing investments with other people makes it worthwhile because you know that you're not alone. You know that you have people you can ask questions and you can ask your questions to. You know that you can always run by investment strategies and then there's this unlimited mentorship and support that comes with it, right? So the simple mission of the YPFG Investment Club is that we are going to empower people and we're going to ensure that you have financial growth in the long run. So you're not thinking, should I or should I not? You're not thinking, oh, am I doing this alone? You're not thinking, oh, what if I don't have money? What if you're not, there are a lot of uncertainties that the YPFG Investment Club stands to clear out. So you're like, you are very sure that, oh, I'm starting this journey with this set of people. I'm starting this journey. In fact, if you don't even know the community members yet, you are very sure that you're starting the journey with me, right? You're starting the journey knowing that deep down, somehow, somewhere, there's somebody that you can always come back to, or rather, there's a community you can always come back to ask those questions about the club, about investing. Is it real estate? Is it stocks? Is it bonds? Is it IPOs that are coming out? You are very sure that, oh, you're good. You're always going to have responses to your questions, right? And now, I wish this was all. I wish that it was just only about the educational resources, or it was just only about the workshops and the seminar and the fact that you have like a community to call your own. But it's way more than that because You have been with me. I think only one person said that you were a visitor. So it means that each and every one of you here have been with me for a specified period of time, right? And it means that you've been here long enough, you've gotten enough value to want to stay longer. In fact, we've even spent more time than we're supposed to spend today, but you're still here. So, and it means a lot to me. So that's why I want to say thank you. And thank you for attending this webinar. I'm going to be giving you a special discount to join the YPFG community, the YPFG investment community. Remember that at the beginning of the year, one of the goals was that we are going to be investing. Apart from we are saving, we are going to be investing, and we're going to be very aggressive with it because I don't understand what's going on. And I feel like someone actually dragged me that, come on now, we need more of this. Someone literally told me that we actually need more of this. And this is someone who I hold to high esteem, right? So because you're here, you're going to be getting a discount. So the regular membership fee is 5K per month, 5,000 every month. 6 months, you pay 30,000. In 1 year, you pay 60,000. However, you're going to be getting community support, you're going to be getting special seminars, you're going to be getting educational resources and materials, things I would not bother myself to share online, screeners, website, educational materials that you would definitely find insightful. You're going to be getting it on the YPFG community. So for the next 48 hours, you're going to be able to save 20% when you join the YPFG community for 6 months. So the minimum we can do, or rather the minimum entry timeline is 6 months, because to be honest, you can't join for 1 month and learn anything. 1 month is just for us to even get to know each other. 1 month is just enough for you to gather your house together and find out what your net worth is and find out whether or not you really want to even do this investing thing. So don't think that 1 month is what you're going to be coming to spend with us, because no, it's not going to work. So for 5,000 naira per month, which does not longer buy us parfait. Please, in case you're thinking of what to buy for me, buy me parfait, sha. But either ways, 1 month does not buy parfait. 5K does not buy parfait. 5K does not buy pizza. 5K does not buy you shawarma. 5K does not even buy you data. But 5K is going to give you the resources that you need to get better with your finances. And because you are here, you're going to be doing 24,000 for 6 months or 48,000 for 12 months only. And this is only valid for the next 48 hours. So please rush back and put your house in order. So you're joining the community, you're joining the investment club because you're going to be getting resources. You're going to be getting more confident about your investing decisions. You're also going to be getting other things apart from that, like being able to set financial goals for yourself. You're going to be able to build a well-diversified portfolio for yourself and also manage your risks more effectively. And you're not going to be doing it alone, because you are going to be doing it with people of the same like mind. So while the YPFG community is there for support and all, the investment club is aimed at specifically investing. So if you know you're interested in investing, then you should be in this community. And then you also want to expand your network and collaborate. So now, one thing I've always noticed is that the more I paid for communities, for exclusive communities, the more my value or my reach to high net worth individuals literally increased, right? And I'm like, if anybody decides to pay, or if anybody decides to join the investment club, it means that that person is of high value. Like the person knows, like, okay, oh, I know that I could have as well done XYZ with this amount, but I have decided that I want to join an investment club where we'll be talking about stocks. We'll be getting stocks to invest in, real estate to invest in, materials to read to invest, to help us get better with investments in general. And we're going to be spending at least 6 months together. So we're eventually going to even become connected, not just be what was the word? Not just be on a group or be online just like that, right? And then there's also the benefits from you being able to do proper financial planning. Within the first 6 months, you will be able to have like a proper financial plan for yourself. And then accountability, because I'm going to be taking accountability very seriously by matching you with fellow people who you people will have to come back to me. So you're going to be reporting to me at the end of the day to be your accountability partner. So this and many more is what you are going to be getting from the YPFG Investment Club. And for you to claim your discount, you have to use the coupon code June22. June22 is your coupon code to get 20% off for the YPFG investment community. Also, before we call it a day, I also like to say thank you for attending this webinar, and I look forward to helping you achieve your financial goals. Remember that you're not sure if you can afford this right now. Just know that this is an investment for your future. In case you are thinking, I don't have enough time to dedicate to it, that is why we're doing it for a minimum of 6 months, whereby no matter how you turn, you still come back. You still come back to us, because it's going to be in a way that even though you're a busy person, you're able to still get the best of the best value. And then another thing is, you're like, oh, you're new to investing, you don't know what to invest in. That is why there was this particular today's session. And then you will be able to now do further research for yourself and further research from group members to get better. And yeah, I'll make sure that this is going to work. Come and see, and you will know whether it is going to work. So, but I only asked that we will get slide reviews. So I think what I'm going to do is, better still, I'm going to share the recording to everyone who attended. And then also you also receive the coupon code to allow you get access to the discount for the next 48 hours. It's already set up, and after 48 hours, the discount disappears and our fee reverts to the regular fee. So I do hope that because you're here, you'd see that it is a good decision for you. It's something that you want to invest in. And in the next 6 months, you'll be very grateful that you spent 1 hour, 41 minutes of your time with Oluchukwu, and yes, you made the right decision for yourself. So if anyone has any more questions, please do well to ask, and I am available to answer. No, I didn't jump any pages. I didn't jump any page, Manali. We want this slide because I feel you do. No, I didn't jump any page. I just spent less time on a particular slide. So Precious, how much is the discount fee? So you're getting a 6,000 naira discount if you use the code, and then you're also getting 12,000 naira discount if you use the code also for the 1 year commitment. So now the thing is, another thing I would like to also find out is, did you get anything, any particular, did you learn anything in particular? Salary earners. Okay. That's a very tricky question. No? When does salary come in? Let's see if we can extend, or rather, salary earners can let me know, so that I will save their slots and I'll give them their own code. Right? So we can actually work 24th to 30th. 24th is just around when our discount code. Okay. All right. For salary earners, is anybody in agreement that they want a discount code for salary earners? Thank you. All right. So we'll work something out. For salary earners who would want to still participate in this and may not be receiving their earnings early enough, I'll send a different discount code for you, specifically for you, to your inbox. I'm going to send it to everybody. So, but that code would only be valid for the period of when you're going to be earning, from probably 25th to 30th, so that I'm fair. Oh, 48 hours. Okay. So yeah. So another thing is, I would also like to find out if you got anything from today's class. I'd like to know. I really appreciate, so that we can, yeah. Let me stop.